Hello and welcome back to our session on IFRS 16 compliance with Hamilton Engine by Cognitus. Today we will discuss about the embedded lease in IFRS 16 by using our solution. My name is Zati and I am an IFRS 16 subject matter expert, part of Hamilton team in lease accounting. So let's proceed. First of all, what are embedded lease? As all of you know that the new lease accounting standard require a lessee to record an asset and liability on the balance sheet for nearly all lease. As a general rules, an embedded lease exists if there is an explicit or implicit asset in the contract where the user has control over the asset. To understand more about the embedded lease, let's continue to the example in the next slide. So from this illustration, example shows that a lessee has taken an aircraft lease bundle with regular aircraft maintenance for a fixed price of 5 million per year, payable at the beginning of each year. The lease commenced on 1st January 2019 until 31st December 2028. The incremental borrowing rate is 5% per year at the commencement date. So, in the contract itself has specified that it has two components. First is the aircraft, which is the lease component, the one we call as an embedded lease. The second is the maintenance of the aircraft, which is the non-lease component. If these two components were charged separately, the vendor would have charged 4 million for the aircraft and 1.5 million for the maintenance per year respectively. So continuing to the example, to identify an embedded lease, we need to separate the contract into its lease and non-lease component and allocate consideration to each. By separating the lease, lessee shall allocate the consideration payable on the basis of the relative SSP, or we call as stand-alone price of fair value, which shall be estimated if observable prices are not readily available. So taken from our example, the total payment for both components is 50 million that will be amortized 5 million for every 10 years with incremental borrowing rate of 5%. And by applying IFRS 15, a price allocation for the use case, you can see the SSP or fair value is equal to 5.5 million in total, where for embedded lease component, which is the aircraft, the fair value is 4 billion with an allocation of 72.73%. While for the non-component, which is the maintenance of the aircraft, the SSP and fair value is 1.5 million with an allocation of 27.27%. So if we calculate the price allocation for the lease component, the total for 10 years will be 36,363,636.36, while for the non-lease component is 30,636,363.64. So based on SSP and fair value for each component, we can now calculate the lease liability and ROU asset for the whole 10 years is equal to 29,482,988 crowns C unit. And as for the expense, it will be recognized on the straight line basis for the non-lease component, which is 1,363,636. So let's see the journal entry for embedded lease in the next slide at the first year of the contract. As for the lease bundling, which will be paid out in advance, payment in the beginning of year, we shall debit payable clearing 5 million and credit rental expense 5 million. As for the embedded lease, which is the aircraft, we shall debit ROU asset 29482,988, credit payable clearing 3636364, credit lease liability 27138,956, credit accumulated depreciation 2948299, and debit interest expense 1292331, debit depreciation expense 2948299. And as for the non-lease component, which is the maintenance, credit payable clearing 1363636 and debit maintenance expense 1363636. So now let's start to load the contract in the Hamilton engine and see the numbers are met. So here you can see all information for one contract. The reason we have three lines is to specify and differentiate the lease and non-lease component. So the first column is the use case. We're going to use L000, which is for the inception. Classification and variant is the group of the lease, which is A320_leasing. Lease agreement and header ID is the original unique contract ID. As for the lease ID, which will be tied to the classification and variant, here we have specified the lease bundling, which is A320 package. A320 aircraft is the embedded lease, and A320 maintenance is the non-lease component. So the start date of the contract is 1st January 2019 until 31st December 2028 with advance payment payable at the beginning of each year. Proceed with the payment information, where the payment date is the same as the contract date, where the amount for this contract is 50 million and has been separated by SSP and ratio. Amount for lease component is 4 million, while for the non-lease component is 1.5 million with incremental borrowing rate of 5% per year. And now all is filled, we're going to load this file into the engine. Just go to your SFP and run tcode/cogn/16tc_raw_excel. Just browsing your file and execute will process immediately. So now the contract has been created. Just go to the main dashboard by running tcode/cogn/16tc_LCD. So here just specify one and press enter. Here you will see the latest contract created in the engine. To see the price allocation for all components, just select this contract and click on price allocation at the top of the screen. On the screen, you will see there are two leases in one contract. The first line is the lease bundling with the value of 50 million, and it has been separated by lease component, which is the aircraft with allocated amount of 36,363,636.36 that will be amortized for 10 years with amount of 3,636,363.63. And from that allocation amount, we can calculate the lease liability is 25,951,926.64, while for the ROU asset is 29,482,887.90. As for the non-lease component, the allocated amount is 13,636,363.64 in total. And for the expense, it will recognize with the amount of 1,363,636 per year. Let's check on the lease schedule. So just go back to the main screen and click on lease schedule. So here you can see that the lease schedule is showing in contract period. Based on our case, that the contract is payable in yearly. So here just change the lease schedule to contract year view by clicking change period at the top of the screen and change to contract year and execute. So here we have the payment due for every beginning of the year with amount of 5 million currency unit. The lease liability opening balance were 50 million minus interest expense 6,880,648.47 minus maintenance expense 13,636,363.63 is equal to 29,482,887.90. 482,987.90, and it will be amortized for the whole year of the contract for 3,636,363.63. Same goes to the ROU asset with the amount of 29,482,987.90, and it has been depreciated for 2,948,298.72. The difference between straight line maintenance expense and payable adjustment will go to the acute expense account. So if we go back to our presentation slide, we see that the amounts are matched, and this is proven that Hamilton engine is the perfect solution for this use case. So I think this is the end of our session. If you haven't watched our other video on the IFRS 16 use case, you can click the link on the description below and just let us know if you have any question about it. Do subscribe our channel, and thank you very much for watching.